answers. All right, now on this third recording, we're going over questions and answers. So anybody out there, if you have any questions or that you want to ask me or Chris or anybody that we have on this chat, who else we got on this chat that I know to be experienced? We got Jack Roth on the net. We got Def Trader on the net. We got Logix on the net. I brought another buddy from Facebook, Mike. He's on the net. These are all different experienced traders that I see on here. And if I missed you, my bad.
Hey, United, somebody wanted me to talk about the Ttm Squeeze real quick on my chart. So yeah, I'm just gonna pull my chart up and share that real quick.
Yeah, go ahead.
Let me see here. Where is it at? Yeah, so the Tcm Squeeze. This is a really cool thing. I think Tom got me onto this one. But the Tcm Squeeze, you're going to find it in your indicators, which are, your studies right up here under Tcm Squeeze. But these red bars, the red dots are going to be squeezes that you're looking for. So from this point right here to this point right here, the stock isn't really doing a whole lot, right? You can see and confirm it's just kind of trading in this range, right? So right here, you're going to get your first green dot. And what the green dot means is that it's triggering out of a squeeze, which means you're going to start to see a slight dip in the stock, right? It's not a crazy dip, but you can start to see it happening right here. And if you're looking at the chart, right? If you're looking at the chart right here, you can see that this bar is actually going to break through VWAP, right? So that's two confirmations. You got a breaking through VWAP and you got a Ttm squeeze about to pop off. So that means that right here it's going down, down, down. You can see the red bar is going down, down, down. But notice it doesn't break through the support, right? And then right here, you can see it goes right back up to VWAP, and you can see that the yellow bar becomes yellow, which means it's triggering a different trend, right? And that's pretty much how you use the Ttm squeeze. You're just looking for these. You can see these on all different kinds of things. The best ones are to see these on the daily. Like, check this shit out, right? You see right here, you got a red bar, a red dot turning into green, right? So that's pulling up at 293, right? You could ride this thing from 293 all the way to $302, right? So that's the Ttm squeeze right there. You can ride it all the way, and these are the breakouts that they're looking for on Nexus callouts, right? We're looking for these long-term swings, and you can even see these blue bars, right? They go up and up and up, and you can see it in the price action. You can see the daily lows coming in, but as a general, if you would have swung from right here to here, your contract would have definitely been in the profit, right? So there you go. That's a Ttm squeeze. You can look at it on all daily charts. You can find it right in your studies. Okay, I'm done. Sorry.
If anybody got any other questions, you can come on the net and ask your questions for me, Chris.
How do you know which calls to take and which calls to ignore?
So in our trading room, we have a lot of calls, and I would say that you figure out if you want to do scalp trading or day trading or swing trading. If you want to, when you choose what style of trading you want to do, okay, say you say swing trading. All right, now you have Nexus Master swing trades coming in, and he has a lot. He brings in spontaneously, 10 to 20 trades a day. So how do you know what to take and what to not? You have to take his trades and you have to check the charts. And that's basically crystal clear. You don't want to just take them right away. Reason why is because he's giving the signals off his advanced program. They're providing him with the breakouts. He's just providing in return the signals to you guys because it's a software that's providing the breakouts. Now, what we don't take into account is news that's coming out. The breakouts that are coming are based off technical analysis. Now, when they come out, and 5 minutes later, a coronavirus hits and the market tanks, the computer software is not taking that into consideration. So you kind of have to keep your ear to the news, keep your ear to Twitter, other social media outlets, and figure out where that's at. And that's why we try to provide updated news. And I hope as a community, we kind of share with each other what's going on in the market. So that's how you decide which calls to take and which calls to ignore. And you never get into all of them. You always want to get into trades that you can afford, that look good to you, and that you can verify it's a good one to get into. Because news can affect catalysts like earnings can affect the price. So, and that's it.
Hey, United, they want to know if you know how to add the TTM squeeze to TradingView. Do you know how to do that by chance?
Yeah, I do.
Maybe you could run that over for them real quick.
Can y'all see my charts now? You share, square. All right. So to add TTM Squeeze onto here, all you do is just go to so you just got to go to indicators and strategies and go to the search bar. You just type in TTM. And when you type in TTM, you could choose a different, so these are different scripts that people have locked down and you could pay for. But what I do is when I'm trying to choose like a really good TTM Squeeze, I kind of went through every single one of these one by one to find the best one. As you can see, I already have TCM Squeeze on here from BTC. He was the best one. So you click on that, save it as favorites. That way on the favorites, you can have it later. You see, I have all these saved. There you have TCM Squeeze on here. So as you can see, we can go to Tesla. I got my TTM Squeeze already set on here. And that's TTM Squeeze right here. See, there you go. Here's the red dots here. And you can get rid of this, and you can compare how TTM Squeeze works for TradingView. And that's how you add TTM Squeeze.
Yeah, I have a question.
Hey, what's going on?
I plan on being a swing trader, and my question is, what rules can I set more for myself, or what rules have you guys set for yourself just starting out, so you won't, get caught with your pants down when you have a potential trade, but you've run out of day trades? Like, how can you pace yourself?
Yeah, so that's a really good question. Thanks for asking that. All right, when it comes to swing trading, I really want to push that everybody needs to get out a TradingView account or take out TradingView. You don't need to take out a brokerage account. If you want to use Thinkorswim platform hosted by TD Ameritrade, you have to apply for TD Ameritrade. You have to get approved, and they give you the Thinkorswim trading platform as like a free service to download. But if you go to tradingview.com, you can register for a TradingView, get a username and log on, and it's free. And basically just technical analysis. But if you want to be successful in this swing trading game, you have to, when these signals come in, you have to be able to throw them on the charts. And you have to be able to see that, are these a good swing trade? And to be a successful swing trader, when you're on the charts, you have to know that you're going to be monitoring higher time frames from 1 hour to like 1 day. So you want to look at like the 1 day chart here and be able to see what the trend is. I gotta get rid of this VWAP. So let's look at a different one. Let's look at Apple. So swing traders, they trade on a higher time frames, like the daily time frames, like Nexus Master. And he trades on these breakouts here. So he rides this whole way. Now, as you can see, this price from Apple all the way down here, say all the way up here, ran $71.49. But if you take this range of 118 days, you could stay in this trade and you would make 50% stock price. You know, if you got into an options contract that was 50 cents and you made $70, if I were to calculate that, you would
That's a whole lot of fucking money.
Yeah. So the thing about is that you have to be committed. If you're gonna be a swing trader, be committed to being a string trader, and realize that you're gonna go through these corrections. See, up and down, up, down, up, down, up, down, up, down, and that's how prices move. They move, you know, in waves. They don't move up or down, you know, vertically or horizontally. They move. And they move like this. That right there is the Elliott wave theory. And then they move in the 5-count impulse wave. And there's like a whole book on this stuff. And when the price is correcting, they move down here in an ABC correction wave, so to speak. So you have to understand that your price, if you're a swing trader, is going to fluctuate. Okay? And you're going to get these. Why is my thing tripping? There. Oh, I have the freaking I have the what you call it on.
Hey, and this is why it's important to get those further out expiration dates when you're swinging, so that you can hold through this shit without having to worry about it. If you're buying something that expires on the first dip, you're gonna screw yourself, and that's why that's important.
Right, because if you're gonna be a successful swing trader, you got to realize that you're buying all the way out here June. You're buying 5 weeks out, so you have to calculate from the current date it is. You're gonna calculate a month out, 2 months out, and you're gonna buy, what is it, February 8th? So you're gonna buy April. You're gonna buy no less than April, 2 months out, or maybe March, 1 month out. And of course, the further out you go, the more likely that the price is gonna hit your target. So you're gonna buy June. And you're going to sit here and you're going to spend the money, not on Amazon, obviously, but say Apple. You want to get on Apple long swing, right? So to be a successful trader, 1, you need to plot on the charts. You can check it out. 2, you got to choose a contract that is further out, okay? And then 3, you got to have the willpower to be able to hold and muster through the corrections. So that's it.
Hey, somebody asked me to go over the IV. Or matter of fact, you're already in it. Can you shed some light on IV and why that's important over there to the right for Muhammad?
Okay. So what we got coming up for earnings? What we got next week? Anybody know?
For next week, shit.
So
Alibaba.
Okay, so we got.
Oh yeah, Baba's coming up. That's right.
All right, definitely. Bob is a good one. I think it's on Thursday. So look at Apple. Apple, you can see the implied volatility, right? See this at 30%, 28%, 29%. So that's how much volatility is going on right now. And the lower the volatility, that's the lower the amount of say exposure or attention that all the investors are paying towards it. So it shows you, how priced in these contracts are. And as implied volatility grows higher towards 100% and actually extends further than 100%, that's how priced in your options contracts are. So as you can see, when it comes to catalyst events like earnings, when you go to someone like BABA, you can see that the implied volatility is going to be a little bit higher as close to on the expiration date on the contracts in relation to when the catalyst event, the earnings is coming up. So you can see that we're at 49% volatility right now, and every day the volatility is going to increase. And when the volatility increases, the value of the contract that you have to pay to own it for the 14 February is also going to increase. So when you get to 60%, this $6.60 that's going to cost you now on Monday when it hits 60% volatility, it might be $7.60. When the volatility is 80%, it's going to be $8.80. So implied volatility increases as the price increases as the event gets closer, and boom, once the earnings hits, the day is gone. The next day, you'll incur, if you're in a position, if it's not going your way, you'll notice that your contract value is going to be worth 0. And then in some instances, if you already bought the contract at a high price, overpriced, then when they're selling off, no one's going to want to buy that contract that you own at that high price. They're not going to want to buy it back. So therefore, you're going to lose on that valuation too. It's kind of like you go to the store and you're looking at the price of milk. And you're like, okay, if I buy this milk over here, this off-brand, I'm going to pay $1.50. If I can buy this really high brand here, I'm going to pay $3.50. So what do I want to do here? You know, and depending on what's going on, and say there's a hurricane just hit, you know, you're going to buy whatever you can. You're not going to care about the price. Same thing with an event, like an earnings. You're going to buy it, but sometimes you buy it and you pay too much for it. If you pay too much for it, you're going to lose out. High implied volatility is very important, especially when it comes to a catalyst event like earnings.
Hey guys, this is Logix. What I've done, and I started out with a small account. And so first, starting out with a small account, I realized I couldn't make as much money as everyone else. And my expectations to make their type of money was, you know, defeating me inside because, I wanted to make money. I wanted to make it fast. So I try to figure out a way how I can apply everybody's rules, everyone's strategies, and try to come up with my own theory. And so every day I was looking at a call price for any particular stock. And every day I would see, okay, if I bought a call strike of 220 and I bought it today and it cost me $100, but tomorrow it's cost me $110, but the next day it's costing me $120, I'm seeing a trend that it's going up. So I go up, I look on Twitter, I look on the chat, see what everyone's talking, see what everyone's technical analysis is, and then I go with it. And basically, I look for catalysts as well. I knew Amazon ER was going to come up. So I was looking for a safe bet that's going to cost me a little money, but the reward was going to be higher. ER is coming up. I saw a strike price. I know the uptrend's up. Nexus messaged it. I look on Twitter. Looks like it's doing good on Twitter. So I go ahead and I risk.
Go on. Yeah, I think you muted yourself, my guy.
Good ER, it beat ER. But at the same time, I calculated and make sure that if I happen to lose, I could still afford it. If I happen to win, I boost my winnings. So I had bought like a 2-3 month contract out to buy my Amazon, and then I happened to hit, and it hit it big. Now you can do that for almost any ER out there, but you gotta play it safe. You gotta say, okay, I gotta buy a contract enough time so that it can recover. But I could also get lucky if that ER or that catalyst or whatever news that I'm looking for can actually, you know, beat it and make earnings. Like if I see a stock that's going up in 1 year, $100, and in the past 3 months it's gone up $75, I think that stock is doing good. I'll go ahead and buy like $5 or $10 strike price because I think it's gonna hit that price of whatever strike price that I want it to go to before that time frame, and I get a little cushion for it. But that's just the strategy that I've been using. I don't know if that worked for everybody, but you gotta look at everyone's strategies and kind of imply those strategies with a strategy that you want to work on yourself and help improve. That's it for me.
Thanks, Logix, man. Thanks for your input. Does anybody have any more questions?
Hey, so does the delta change as the stock price change, or that's something that remains constant?
Nope, it changes when the price changes because it's going to move, right? As the price goes up, the delta is going to change too because it's going to move up in the it's going to move up in the in the spread, so to speak. It'll be like 2 in the money, and then if the price goes up, then that one will be 3 in the money, 4 in the money. So it'll go from like 0.56 to 0.58 or whatever the case might be.
Oh, cool. And it's the same for like basically every other delta, right? I would assume. I mean,
Right, and that's what
I mean, every other like the Greeks, like.
Right, all the Greeks are changing every second, and that's why it's important to understand the Greeks and understand that, if you're buying high IV and you're buying something that's going to expire quick, it's going to take a shit on you. You'll notice if you're going to play earnings on a Wednesday, right, and the IV's 125%, but if you just buy, 2 or 3 months out, the IV is, only 50%. So if you do lose, you're not going to lose as much because the premium is going to come back down to a regular, right? So the 125% IV will come back down to maybe 60, where the case might be. And the one that you bought, the 50 IV, will probably come back down to 40. So you're not going to lose. I mean, you're still going to lose, but you just gotta understand the risk. Just understand what you're getting into, and that's the most important.
Cool. Thanks.
Hey, I had a quick question. So I know you said like when you want to day trade and scalp, it's better to be in the money. Now, when you buy something that's like a couple spreads like in the money, are you automatically in profit?
Yes, especially if you get, so you're going to be in the profit because if you buy something in the money, the shares themselves are going to have a value, right? So you're going to have 100 shares, and if you buy in the money, you're going to have that value in general. And most of the time, when you do buy, so if I buy a Tesla in the call money and I chip away at the ask or whatever, as soon as I buy the contract, it's already in the money for a couple $100. You know what I'm saying?
Oh, so you can just buy something that's in the money and then just sell it and you just make a quick profit.
Exactly, but you gotta get the fill right, and you have to be in the uptrend. And sometimes I could get in and out of a trade in literally 60 seconds. Literally 60 seconds, and be profitable. And that's because you're buying in the money. I mean, have you ever bought a call that was out of the money, and as soon as you enter it, it was already at loss? 20 or 30 bucks. It's because you got a shitty fill. You know what I'm saying? You really got to be conscious of what you're getting into and get your fills right,
Okay.
Cumsteadt, if I could add something to that for him, actually. So, as someone who was a beginning trader like about a year ago, I think where his question is coming from is like, if I buy it right now and nothing happens, just because he bought it in the money and sells it immediately, he's not going to be making money. Obviously, you need to wait for that uptrend. That's what's going to make you the money, if that makes sense.
Okay, so let's say you buy it in the money and instead of like it going up, it goes back down. But since like you're in the
You're
money,
losing.
so would you
Even though you're still in the money, you're going to be losing at that instant.
Premium.
It went down a little bit.
Yeah, you're going to lose premium. Yeah. If you get it in the money call, and the price goes down, you're going to see it immediately. And that's why it's really important to make sure you're getting a successful breakout on the chart when you enter, right? And for me, I cut my losses hella quick. If I go into Tesla, right, with 5 contracts and I see a 2 or 3% loss already, which equates, to $1,000, dude, I'm out of it. And I'm going to wait for a new entry because I'm not giving those bastards my money. You know what I mean? It's just not something I want to do. So if you're scalping, be on top of your trade. I mean, really, it's important.
like, so I know because I usually trade stocks, but with options, it's a lot more volatile and you can make a lot more and you can lose a lot more. It's like, what's like the most you risk like on your contract? Maybe like 5%, 10%.
I draw the line under 10%. If I get to a 10% loss on a scalp, I'm gonna exit before that. I'm not gonna be willing to lose more than 10%. That's just my personal opinion. Some people, like, look at Tesla, right? Nexus said to get into Tesla and hold it, right? Some of us exited because it started to go down a little bit. But had you would have held, there was a few bars where Tesla started going up, and that call became in the money. So really, you just got to define your own risk, and that's why it's important to have a trading journal. Write it down. When you're scalping, yeah, you got to be quick to pull the trigger, right? You have to be quick to enter off that bar, but you also have to be quick enough to know when to get out. So you either have a mental note or jot something down, at 6%, I'm going to get out. I'm going to let this trade go to 10% loss and then I'm out. Or also to the upside, make sure you're watching for a bar reversal on the 1 or 5 minute chart if you're going to be scalping, and secure the bag. Don't wait for 100% profit. I'll secure the bag at, 11%, 15%, especially if I see a red bar start to build on a 1 minute chart.
Okay, and like really quick. So on Friday, after Tesla shot up, and then it started going down a little bit. So I bought like a put. It was out of the money put for Feb 14th, and it wasn't. I mean, it was out of the money, but I bought it at 744 when the Tesla was at 744, and then it went down to 741. But I was somehow still losing percentage, even though the stock price went down.
Yeah. So the reason for that is because the premium is always going up and down, right? So the IV could have changed at that specific moment or anything like that. And with Tesla, you have to remember that the drops are so quick that, by the time it dropped that $3 or whatever the case might be, the fill on the contract might have been a little off, especially if you were doing a market or whatever like that. So it could have to do with fill. It could have to do with IV. But when you're doing a put and you want to scalp, this is why it's important to get in the money. Because if you get out of the money, you're going to lose faster than you can win. And I can't stress this enough. If you're trying to scalp, definitely buy in the money. Because out of the money, it really does take a longer time to get to a profit, as to where if you get a stock that's already, if you get a call or a put that's in the money, you already have what, intrinsic value, right? Is that the right value? The intrinsic value. So it's just really important that you get in the money instead of out of the money.
Okay, thank you. Yeah, that cleared things up. Thank you.
Yeah, no problem. And please reach out separately if you need some more help with that or understanding.
Okay.
Hey, SK, I see your question in the chat. The best limit for a stop price. If you're looking for a stop, it's best to figure that out on a swing basis or a scalp. If you're going to be swinging a call option, Nexus Master usually goes with a 60% loss. That's where if you're scalping, because you're scalping and you can lose money so quick, it's important that you really tighten up that stop loss, SK. So be aware of that. All right, go ahead, United. Sorry, man.
Yeah, so here's the way I see it when it comes to swing trading, and I talked to Nexus Master on the phone. Hopefully one day we can get him up on this chat group one day. But hey, 65% loss is his cut loss. But at the end of the day, he honestly doesn't really care. You know why? Because his risk portfolio is very small. A 65% loss to him on one single contract that maybe costs $500 in relation to someone who has a portfolio of, say, 30 grand, he can let that expire worthless and lose the whole thing and not care. You know why? It's because we're moving on to bigger and better contracts. You gotta understand that when you get into contracts, you're not gonna win every single one of them. That's why we're telling you that you cannot use 50% of your portfolio in any trade. You have to try to have enough money where you can only use about 10% of your portfolio max. So if you have $10,000 capital size, 10% of that is how much? $1,000 you can use per trade, and that's only up to $1,000. So say you're in Roku and it costs you $500. You can buy 2 of those contracts that cost $1,000, and that's the max for that particular trade. So if that Roku contract ever expired worthless and it went 40, 50, 60, you just watched it die, you never came back, because sometimes they never come back. And sometimes Nexus Master's like, hey, just be careful. I mean, no worries. Watch out. It's going to come back. All of a sudden, it comes back to life. You're like, oh, man, I was down this much, and now it came back. Oh, man, it's awesome. But sometimes they die. Well, if it expires worthless, you lose a whole $1,000. You still have $9,000 that you're already inputting, and you're going into other contracts that are better, and it'll make up for that loss. Because we take losses every day. At the end of the day, it's that you want your profits to outweigh your losses. And that's what matters.
Exactly.
I took
That's
losses
for
from Friday
sure.
too. In the culture of our trading system, our trading world, in any group I've ever been to, I've been in 4 other paid groups before I came to this one. I've been to many free groups, which are really ain't that good. And the culture is everybody just shows their profits, no one ever shows their losses, you know, because it's depressing. But at the end of the day, if you have more profits than loss, then it doesn't matter. It's what your overall net profit is. Okay, so just keep grinding. If you have a lost contract, it better not be more than 10% of your profile, because if it's 50%, then you just chose to kill your whole capital size down by risking that much. So just think about it. Risk of your portfolio. Protect it. The most important thing in life with trading, in the trading world, is capital preservation. Okay? Preserve your capital at all costs, meaning set rules for yourself. If you're a scalper, under 5%, under 10%. If you're a swing trader, I personally won't go more than 30%, maybe 20%, you know, that I'm willing to lose per trade, because I'm only using overall 10% of my overall capital size, if that makes sense. So to recap that, you have your size you use for your whole capital size overall per trade. Then within that single trade, you have your stop loss percentage that you're willing to lose with that one single trade. So you're putting these silly rules that you have on yourself and on your trading, like rules we have in life overall. Thank you.
Hey guys, sorry to cut you off, United, but I got to get going. If anybody needs anything else, you guys can reach out to me personally. I really want to appreciate or say thank you for all your time. I appreciate you guys gathering today. You know, one team, one dream. We're going to get this money. We're going to secure our bags. All right. See you guys on Monday.
All right. Thanks, Chris. Appreciate it.
Thanks, Chris.
All right. We'll open up for a few more questions, and then we're going to get out of here and close it off. We've been talking for about an hour and 20 minutes. So, you know, pretty good. Anybody got anything else they want to talk about?
Yeah. So as far as IPOs and tickers, how many do you watch at a time? Because I found myself, you know, waking up when the stock market opens and I'm checking the charts for about 10 tickers at a time. And just my question is, how many do you use, or how many do you watch at a time? And what characteristics do you look for when you're choosing the ones you want to look at for that week or for that day?
All right. That's a good question. Let me bring up my charts. You see my charts?
Yeah.
Okay. All right. So I realized that I do a lot of research at nighttime, and I'm looking on Twitter for different events going on, and that's the news. So there's different types of traders you can be. You could be a technical analysis trader, which we're trading on the charts here. I'm trading on pure technicals. I'm saying, hey, by technicals, I know that tomorrow Apple's going to go up because of this situation and this situation, right? And these indicators, scripts or whatnot. Then you have news traders where they're trading on the news and they know that President Trump just bashed Apple and how they've been slowing down iPhones and they suck and all that. So I'm looking at Apple and I'm throwing it on my charts. You know, if I go here and you look at my charts, you can see I can bring up 8 of them. And if it will switch to it, yeah. So here on 8 charts, if you go on TOS, you can do whatever you want. So you can see that I have all these different tickers. So as I'm scouring through the news and I'm looking at briefing.com, Twitter, whatever on the news, and I see these events going on, I'll throw them up if I think they're important, and then I'll look for them in the morning for like breakouts. Also earnings. If you're an earnings trader, you know, you're gonna throw your earnings on there. You're gonna trade the reaction to earnings. So It all just depends on what you got on here. Here, I have like a bunch of tabs. So these tab looks, I have an earnings tab here. I have a news tab here. I have Nexus watch list, in my in positions. I have indefinite. So I have different. So if I click on this particular chart, I get 8 more charts that were all based on news. And you can see that I have this category as news, and all 8 of these charts have some kind of news going on. So now I have 8 charts here that I'm actually in these positions. I've created another set of charts here that's news. And then say I'm tracking earnings, I can throw up another tab of 8 charts, and these are just on earnings. So you're asking me how many tickers? I mean, it can fluctuate to just 1 to many on here. Now, how to manage these? How do I manage these? I set alerts. That's how I manage these. How do I set alerts? I go on here and I set alerts for certain levels. So say that, here, let me, intervals. I got everything here on the 5-minute chart here. And I'm just right clicking and I'm adding alerts here. Crossing up here and I'll create it. They have alert here. So when the price breaks above here, then I'm gonna get alert. I'll right click on here. If it breaks down below, I'm gonna add an alert. Crossing down, I'm gonna create it. So now I don't have to watch Amazon, right? I have an alert system helping me, watch it for me. All right, Activision, oh, they got the new Call of Duty releasing. They got some new cool thing going on. They got earnings coming out. Let me go ahead and I'm gonna add alert. So, and these are level breaks. So whenever these levels are crossed, you can enter here. And basically, you almost have somebody watching these charts for you. So your job is to just find those tickers that are trending, okay? Find the tickers that are trending, throw them on your charts, set alerts, and then you wait for those alerts to hit. And that's how you know you can enter and exit on different positions. So to answer your question, it just varies depending on what's hot or not, what's hot on the charts. And I also use Nexus Master and his signals that he throws out. I'll throw all those on the chart. So if I go to this tab, I'll load the chart for Nexus Watch List 2. And anytime he's coming out with tomorrow, be on the watch for this. I'm trading this tomorrow. This is what I'm doing. I'm gonna throw it Disney on here, Tilray, Shopify, you know, Twilio, Boeing, Whirlpool, Dropbox. I'm gonna throw those all on my charts if he gave those signals out, and I'm gonna set alerts for them, and then I'm gonna trade it that way.
Gotcha. All right. Appreciate it.
What kind of indicators do you use?
Sorry, can you say it again?
What kind of indicators do you use? Like ViewWeb or 5-minute SMA, like that?
So I use so I like using traditional candles. I like using Hakanashi candles because they show more of an obvious trend. As far as moving averages, I use the EMA's exponential moving average. As far as other indicators, momentum indicators, I use stock RSI, I use MACD. I use VWAP as well. The VWAP stands for volume weighted average price.
Yep. Okay, thank you.
And of course, volume. You gotta have your volume up.
Okay, yeah.
And I actually have a video on it. Look in the videos channel, you'll be able to find my whole video on my MACD's trading strategy and how to set up all of this that you see here.
Okay, I will do that.
I want everybody to be a chartist. I want everybody to be able to see Nexus Master signals come in. I want you to be able to immediately go to your TOS app, immediately go to your trading view, and be like, all right, this is not quite ready. I'm gonna wait till it rebounds off moving averages. I'm gonna wait till my momentum indicators reset, and then I'm gonna get in because it's trending. And that's why you get the signal, because it's trending. It's breaking out on the 1 day, so you gotta find a good entry.
Right.
Hey, United. Have you ever used volume profile?
No, I haven't.
Okay.
Is that on TradingView?
Yeah, if you just click indicators
Yeah.
and then volume profile right there on the bottom. No, you don't have to type it.
Oh,
Yeah, I was experimenting with these, but still not sure about it.
definitely look into it though. Thanks.
Yeah, it puts volume on the actual y-axis.
Yeah, I'll have to look in that.
Nina.
You got any other questions?
If no one has a question, I'll ask this. When you're setting alerts on the actual indicators, what do you look for, and what kind of alerts on indicators do you set?
So going from the top down, if you're looking just at the pure candles here, okay? Let me get rid of these drawings. So say here you have Amazon, all right? What you want to look for are these candles breaking up these moving averages. Get as close as possible. If you notice you have the yellow line crossing the blue line, crossing the orange line, okay? That's showing a bullish cross here. Then you have the green, which is the 50. Those smaller moving averages are crossing up to 50. And if you really want some confirmation of uptrend, all these moving averages are crossing up the 200 and the 100 EMA. The 100 EMA is in purple. The 200 EMA is in red. Those are the most powerful moving averages. And if you can break these, then that's the confirmation of uptrend. So when it comes to moving averages and candles, that's what you're looking for to confirm you're going to enter into any trade, is these bull breaks. Also the same thing when you're buying a put, okay? If you notice the whole time, this candle's broke above these EMAs, right? So look how far we went up. Say you confirm the breakout here, and then when the next candle opens up above the red, you want to enter the position. And you don't want to get out of this position until the candles break down below the moving averages. So you see at any time these candles were above the yellow moving averages, the 10, you see that? Above the 10. You ain't got to get out. Even though it's red, you don't have to get out. Look, above the 10, here, above the 10, here. Now you see this candle is engulfed down below the 10 and the 20. You see that?
Mm-hmm.
See, now you're seeing bearish movement here, okay? But you don't have to get out until the candle closes in below. But it's all about your risk and your reward. If you're willing to take the risk for a higher reward, then you're willing to take the gamble. But you also can lose some more money risking for that higher price. But
Right. So
really broke below the yellow.
What actual like alert do you set? Do you set alert for each of these moving averages?
Yeah, you can. So if you just right click on these moving averages and you go to alerts, if you can see, you can set a condition here where you take your moving averages and you set your EMA 1, that's the 10, crossing down the moving average of EMA 2, which is the 20, you can set an alert. So as soon as the 10 crosses down to 20, you get an alert to sell. So you could do this manually and watch it, or you can have the alert bot on TradingView teach you. Give it to you if you set it. And you can maximize your gains utilizing the resources on TradingView. So that's how you want to trade it. Now, uptrends and breakouts on the moving averages. If you want to talk about stock RSI, reach below the bottom of this lower band, when you're moving uptrending back up, then you can enter when this position breaks the lower band right here, 20, and then you can enter into this position, and you get out when this crosses down. You see how this crossed up here, and how this is bear crossing down. You can get out. So say you're trading like you're swing trading or like day trading. You can literally trade just this if you want to. Say when you got, so you see a double bottom here, it crossed up, hit the bottom, crossed up, came, you got a double bottom, and say you want to enter here, or if you want a higher risk, if you want to actually play it more safer, you will enter here on the RSI when it crosses. Actually, it'll be here the next candle. And then you want to get out when the bear crosses here. It's a sign you can get out early, or you can wait for the confirmation of downtrend and get out here. But say you want to play a little bit safer, you get out as soon as it starts crossing. You can scroll up and you can see how much you're making here on profit. You're entering in this candle now. Say we're entering at the open and you're closing at the end of the day. And at some point, you're closing here or when you see peak profit. So, I mean, there's a way, it depends on how your style of trading. There's a way that you could get in and out of trades using every single indicator. You know, you can set alerts here on MACD, where you can enter here and then you can exit up here and you can get alerted.
Yeah, MACD is the one I've used for signal line crossing MACD line as an alert.
Yep. Enter here, exit here.
Got it.
See? The MACD is under the 0 line, it bull cross, you entered here, and then it exit here, so now you're closing at open. There you go. MACD strategy, you just made 11% stock price. $215 on Amazon. Took 4 days in the trade. Swing trading. All right, so I think it's time to get out of here. Thank you for joining, and I'll see you guys.
Before you go, United, I want to share something with you.
Okay, go ahead.
Click anywhere on the chart and press Alt-H and Alt-V.
And Alt what?
No, just separately. Press Alt-H and then press Alt-V.
Alt-H and Alt-B?
V.
Oh.
There you go. That's the shortcut.
Yeah. Nice. See, I learn something new every day.
All right, good call, man. I'll look for the replay on YouTube.
Okay. All right. Thanks, guys. I'm gonna get out of here. If you got any more questions, y'all can post it up on the general questions channel in the chat room. Thank you for coming out. Bye.
Thanks, United.
Thank you.
Thank you.